With Gary Shapiro right now, Southwest Financial Center. Gary, good morning to you.
Good morning.
How are you?
Very well, thank you.
So what's going on? I understand I'm going to learn three things that I've been wanting. I have been so curious.
Okay.
How curious
okay.
have I been? Ask me.
Extremely. We talked
No, you
a
got to
little
ask
bit
me. How
before.
curious have you been, Bruce?
How curious are you, Bruce?
Well, you already know. Why
Okay.
do I need to answer that? What's
so,
going on?
So three things. I thought I'd bring up three
Yeah.
things. This event and discussing in the next couple days as well with clients that come through. Audit rates now are going lower and lower and lower. IRS audits for the last 5 years have steadily gone down.
You mean fewer and fewer?
Fewer and fewer,
Okay.
which kind of is a good thing for a lot of people. But the audit rate cuts by 28% for those over 200,000 in income, and just about by 50% for those that are making $1 million or more. It averages out to 1 in 143 tax returns are being audited. The caveat or watch out for that, and I always mention to my customers, computerized audits are a thing now. Computerized audits do document matching, 1099s, W-2s. The latest is 1099Ks by way of PayPal, credit card, that type of thing. So it's very easy now to match what you put in and what they see on the other side. So they don't have the manpower any longer to do first-hand physical audits, right? So that's going to continue. That certainly looks like they're cutting back on the budget some more this year.
Be it known that if you're running on one of their tax forms or a tax form on the computer, it makes it much easier to check. Right, because they can just run that through their computer.
Right,
Red flag comes up. I mean,
same thing with applying for credits or saying mortgage interest or number of properties mortgage interest. They've got these things down to a science now. So they don't necessarily need to send letters, let's meet, et cetera, et cetera. They'll just send letters and say, okay, show us proof of, and then if you don't respond, they'll just automatically assess, right? But there are certain parameters to watch out for, and I'm always guiding my customers as well, right? So, you can't, say, okay, I made $50,000 and I donated $40,000 worth of my household goods. That just doesn't line up. So
that's what I did. That's what I claimed.
You got to be really careful with certain things.
Right.
So I want people to know that computerized audits are here to stay.
Yeah.
Physical audits, one-on-one with an IRS officer, that is going lower and lower and lower. And in the next budget season, we'll see again they're going to take money away from the IRS physical audit division. But be careful with what you do, right?
Right.
Garbage in, garbage out. So that was the one thing. There was a bit of news in a tax court legislation that came through a few months ago. Alternative medicine treatments for people. Usually not a deductible, itemized deduction for medical expenses. Because for general wellness and just alternatives, people look to physicians for regular treatment, prescriptions, etc.
Right.
Tax court legislation sided with the taxpayer. Taxpayer was prescribed this from an MD to seek alternative medical treatment, and it actually helped heal a particular illness. Tax court sided with the taxpayer, and it was an allowable tax deduction.
Oh.
So usually, when you think of alternative, you think of holistic medicine and things like that. If there's an illness, and if it's treating an illness, and if it is getting better, that's going to work in somebody's favor. So that's a big change. But again, be careful about products or services from practitioners when it's just for general wellness issues, right? So this person had spinal stenosis or some sort of disease or what have you, looking for a cure and looking for remedies and it actually working, that's at a whole different level, right? So, but that in and of itself is big news as far as that goes. And the last thing, and I think this is enormous. Usually when you have a debt with the IRS sends you letters, collection letters, and that type of thing. They'll send to your last known address. They'll attempt to reach you by phone after sending letters. Now we're at that day and age where Congress allowed them with a lot of regulation to outsource this to private debt collection agencies. So watch out, spring 2017. We are in spring officially now. Within the next month or two, people that owe a sizable amount of IRS debt, first the IRS is going to send a letter. Second, the collection agency that is getting the debt to collect, they'll send a letter. And then upon those two letters, then they can place a phone call and then start calling and calling. Debt protections are still going to be there for people. But be aware that it's not just the IRS that can come calling on you. They're not going to come knocking on your door. They're not going to send you emails, right? IRS notoriously will never, ever, ever send anybody an email.
Okay.
And certainly these debt collection agencies will not be allowed to send emails either, right? So be careful of hidden links and emails and things like that, because that's going to, I guarantee you, in a few months, there's going to be a flood of emails. We are collecting and we're going to put you behind bars or whatever if you don't pay us.
Right.
And of course the payment they want is a Sam's Club gift card or something like that, right?
Yeah.
And that's one of their Prince in Uruguay type of things, right? But those three I thought were real big news as far as the IRS front goes. Yeah. So.
A lot of changes, and obviously with the last one you spoke of, there's also an opportunity for people to take advantage of that, so you need to be careful too. I mean, because you may not owe anything and all of a sudden you're getting a letter from a debt collection agency because of your taxes. You need to double check and make sure, just don't send money out just willy-nilly. If you're going to do that, send it to me.
Right, that's a definite. I always tell customers, no matter what, any letter you get from, IRS or especially California Franchise Tax Board, Arizona, any state, let's take a look at it before, you start writing out checks just so that the letters stop.
Right.
Let's take a look at it, see the whys and wherefores, and make sure that it's correct and make sure that it's fair. Oftentimes, all it takes is a well done letter to let go of the penalties.
Okay.
And in a lot of cases, penalties add up. I mean, if a debt is, 3 to 5 years old, that original debt can go from, let's say, $5,000 to $7,500. Interest you can't waive, that's statutory, but penalties can be stacked, and penalties could be $1,200 or $1,400 of that $7,500 bill, for example. So, oftentimes it only takes a well-documented letter, right? And good rationale and good reasons why things kind of fell between the cracks, as it were, right? So, we've been very, very successful doing that. And most people, our customers are pretty much over the last 25 years, I think next year is the 30th year, know that, during the year, just call, come by, let's see the letter.
Right.
I don't have the wherewithal or process time or whatever to issue bills. That's always been a thing with me. I'm here to help you during the year, and anything comes up, that's what I'm here for. Right. So, it's a good thing to be aware of, that these things are happening. These changes are afoot, as it were, and the only thing I was wondering is whether collection agencies are getting half the money, but they've obviously got skin in the game.
Yeah.
So there's going to be some harsh phone calls. You could figure that, right?
Yeah.
So just be aware of what your rights are.
But also remember, they can't harass you at work. It's illegal.
Right.
After once told, they can't call you at work. So, but unfortunately, it just doesn't get to that situation. We hope it doesn't.
Right.
So those are the three things. Now, if you want to know more, or you have situations coming up that you know about, you need to get a hold of Gary. If you're unsure about your tax returns, get a hold of Gary. Don't be just, I think this will work, because goodness knows, for whatever it takes to get it done right the first time, it's better than what it will take to get out of it if you did it incorrectly and sent it in. Because they're going to figure one of two things. One, you tried to fool them, or two, you're too dumb and didn't figure it out. And you don't need either one of those.
Right. Better do it right the first time. Well, it's to the point, and you're right. It takes a lot more to fix things after than to do it right the first time, and to justify, certain procedures or deductions. Try to catch up with deductions 3 years later, 2 years later, where they don't exist, and you've got a wing and a prayer basically on who you reach by way of this letter or this phone call that might be kind enough to, overlook a procedure that, they have in their book to say, well, no, it's too late. We just
Sure.
don't believe you without any kind of, date stamp documentation. So, yeah, for a few dollars more, it pays to do the right thing right away.
That's what Clint Eastwood said, for a few dollars more.
Right. That was a good show. I enjoyed it.
Gary, thank you very much.
Pleasure as always.
Southwest Financial, ladies and gentlemen. We will return with more of the morning show right after this.